With Trump's big tariff deadline being extended today and the RBA's shock decision, are we about to see a fresh wave of buying to take the ASX to stellar heights? And more importantly, will you be ready to ride the wave? Especially in those key areas that stand to win big on Trump's tariff news. So get ready, because we not only highlight key ASX stocks that stand to win big, but we'll give you key levels and strategies to help you become a better investor. Now, if you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian Stock Market Show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Dale Gillum, and joining me are Wealth Within professional traders Janine Cox and Philip Tortevsky. Good evening, ladies and gentlemen, and I use that very sparingly on Phil.
Don't you mean lady?
Lady, sorry.
Good evening. Good to have you back. I mean, I love Phil being in the chair as well, but it's just a pleasure to see you.
Well, I'm the host with the most, they tell me.
Yeah,
Something like that.
you've come at a great week, right?
What a great day.
Wow.
Like 2 major things, RBA and Trump, on the same day. Now, I don't know about you guys, but you could have smashed me down with a stick, and the RBA not cutting rates today.
Crazy.
Like, seriously, who's in charge of that place?
I guess I'm the only one who wasn't surprised, because I've been saying I didn't think that they should cut rates, and then last week in an interview I said the same thing.
And I can
but
back
I'm the
that
only
up.
one who said that.
Yeah?
She actually did, yep, on a previous recording. Go and check it out last week, I believe, on the show, or maybe the week before, yep.
It was on the YouTube show.
On the YouTube show, Janine was there saying, nope, I don't think it's going to happen.
Get the gaffer tape, put it on Janine's mouth. Like she smozzed us.
What, you're saying I influenced the story?
Yeah, the RBA watches the show all the time, don't you know?
Well, they need to at least allow 6 months for the previous cut to settle in.
Rubbish.
CBA had originally said that we would have a cut in August, so don't be too concerned and don't hold me to account. I didn't make the decision, but I think that they will cut next month.
They have to.
I don't know. I'm not listening anymore. I mean, every economist in Australia said they were, so...
Oh, well, let's stop the speculating and get straight into it. Now, major news right now, as we mentioned earlier, is Trump has extended the pause on tariffs until August. Now, when Trump did this back in April, markets boomed. So, Janine, boom, boom, Donald Trump. What's going to happen this time?
I love it. Boom, boom, Donald Trump. I'm sure they're going to love that in the headlines.
Oh, why not?
All I can say is that I'm really quite intrigued by this whole thing with receiving a letter to find out whether or not your tariff has been cut. I mean, it's just a bit more of the comedy act. But
don't they normally deliver bad news by letters?
I don't know. I thought letters is, that's history. Does anybody send a letter anymore?
Well, yes.
Apparently so, yes.
Apparently so. I do have a letterbox, and there's bits of paper that get into it every now and again, and not all real estate agents trying to sell my house.
Maybe we could say, look, we just never received it.
So, let's get serious, Phil.
Yes, big news, but not surprising, right? We spoke on previous shows as well that, hey, it is a negotiation tactic for Donald Trump. To get the parties to the table, it was evident with the China situation. It's happened again. He's kicked it down the road. And there will be certain sectors that will benefit from this. A bit more stability to the market, that's a good sign. We are coming into earnings season, so that is a period where the market can get a bit volatile. We have this rate decision as well that has basically ended, so we have a lot more certainty around that as well. So I think from major catalyst point of view, it is mixed. I mean, it would have been nice to get that rate cut for the market, but hey, at least we've got some settlement on what's going to happen for 1 month before he makes his new decision. But hey, he's just kicking it down the road at the moment, and really it's quite evident.
I think there's more, I'd say more important things to focus on at the moment. Obviously, the wars things going on, I think he's probably concentrating a little bit more on that. But I'm with you, Phil. But anyway, now, as mentioned earlier, there will be stocks and sectors that will benefit more from the tariff pause. So how about we get into some of those, Phil? And I'm going to throw it off to you.
Yeah, we're going to get into some charts now with those companies that are directly related to this news that's come out. So first up on the screen, we do have Ansell. Now, a substantial portion of revenue is derived from the US. Ansell, we all know what they do. It's likely to see favourable impacts from this tariff pause. And to be honest, since 2024 January, this company has been on a bit of a run. It wasn't immune from the correction that most stocks had during the situation. And, this was quite a deep correction, but rightfully so. It is a company that is directly affected by what happens with those tariffs. But what's exciting to me about Ansell, now that there is a little more clarity, and it has held above a really, really important level. And that's the major point I want to raise here. It's been so long for Ansell to find support on the flip side of $30 or $29, if you will. It's been resistance for a long time. It broke through in 2021, then broke all the way back down and found that it's resistance. On this recent rise up, you can clearly see that we are finding support. That's the first time that's happened for this stock since 2015. So that's a very exciting time. Add the catalyst with stability, add this momentum line underneath as well. I think right now Ansell is looking quite impressive if it can get going, and it seems to be the way. We've already got a green bar coming through in July starting to pick up. So as long as it runs through this momentum, it looks sustainable, this kind of rise. I think the next move up will be quite impactful, and we could very easily see a rise back up to that $37 for this one. So, short, medium-term opportunity definitely, and the way it's come out of these lows from $20 and holding above $29, this could even be the start of a bigger long-term opportunity.
I actually like this stock at the moment, and there's probably, there's three of them on this list that I think are super, super special. So make sure you keep watching, because the next three stocks are awesome. Now I'm going to go to you for the next one, Janine.
I was hoping you'd ask me a question about that one, but anyway, okay, let's move on.
Let's move on. Phil's covered it. I don't need any more.
Okay, Reliance World Corporation. Now, obviously not as pretty as the one we had before. Phil, you're laughing there. Specialising in plumbing and water control systems, RWC's US market exposure positions it well to benefit from the tariff pause. Now, it looks like to me it's in a big pause as well, when you're looking at the chart. But what I'm liking here is the fact that if we're looking at most of the volatility that happens, it seems to sort of reverberate around this centre point here, either side of it, like it's gone through there, it's come way back down, gone through it. But this would probably be where it spent most of the time, around that 424.30, which is where it's finding support. So I think that there is hope for this stock looking ahead, given the support level that's at that 430 point. But all we need to see now is for it to get back above this level, around closer to $5. Shorter term traders might take a tighter entry on it and may even use a trend line in there. But if it gets above a trend line, it's got a lot of boxes ticked for me in terms of the upside, because there's not a lot stopping it. There's some short-term resistance here from this point where that I mentioned before in May, I think it is 2025. But once it gets through that, then these highs are a fair way away. So it should be nice for short or medium term. But check the volatility though. If you are going to trade this stock, make sure it suits what you can handle, because even though it goes up 15 or 16% in a week, it can actually fall quite quickly when it does fall. So we're just looking at the decline that usually happens faster than what rises happen, but in that case it actually was slower. But so look, stocks like these that are quite volatile, sometimes they don't give you exits right near the top either. So that's to be mindful when you're checking the rules.
But you're saying it's setting itself up for a run right now? Setting
itself up for a run, but if it goes back below that outside bar of last week, I'd forget it. It's got to meet those fairly strict criteria, which one, getting through that trend line would have to be a nice close. If you're a bit more conservative, you might wait for it to get through that point there.
And if you're a bit more aggressive like Phil and I,
you're
ready to pull the trigger any minute now anyway. Now we're going to be talking about a merger with Platinum Asset Management shortly, and also going to get into some ETFs shortly as well. So there's some really exciting stuff coming up in a minute on the show. But what's the next stock, Phil?
All right, so the next one is Breville Group. We all know Breville Group as...
They make good toasties.
The toasty place, yeah, absolutely. I mean, look, they make quite a few good products, but it's got significant US market exposure. And, this is one that's expected to benefit from the reduced tariff-related costs and improved consumer sentiment. I mean, stability is what most companies like, especially when we're dealing with these scenarios. And stability, I can't really say the word for Breville's of recent. It's been quite volatile, and it's quite acceptable from the fact that a lot of the sentiment and where this company is, deriving its income from, plays into that. And so we have seen much bigger volatility if we look on this weekly chart. I'll just zoom that out because you can clearly see February, March, April, yes, the lows have been, the correction has been like what we saw with the bigger market, but have a look at the recovery. Like, these are big weekly bars. We saw it all throughout May. We saw a big pull up for then the market to start pulling back down. Now, what I like about Breville, and sometimes, Janine and Dale, these unfoldings on stocks, and I'll go on the monthly chart, I want to zoom it out, get taken for granted. There's this old saying, the trend is your friend, right? And there's a lot of people out there that go and look for stocks. I know, we see it so many times when students come to us, they look at charts and they're looking for stocks at all-time lows. And they think, okay, it's cheap, I've got to get into this one, that's where my opportunity is. But just letting the trend be your friend and riding simple waves, knowing that, hey, there's bullish momentum here, there's buying sentiment, often yields the easiest trading. And that's a lot of the stuff, as you guys know, that we do teach out there. And right now we're getting that same unfolding. We're coming back to the longest term gradient of rise, tapped the momentum line pretty much exactly, right? How often you say that? And tested the low. We've got big volume coming in at around the low. So right now we're getting very close to confirming the next leg up. So I would say this is definitely one to put on the watch list. Is it a buy today? No, but it is, getting very close to lining up to giving us that onset of the next run up. I quite like it.
I like it too, but I'm actually liking one that you got coming up in a minute, because I know with the US, inflation's down. Trump's putting a hell of a lot of pressure on the Federal Reserve to drop interest rates because they're too high. By world standards, they're still too high. So any movement down in that's going to really do affect the building industry in the US, which will shoot one of these stocks up, I reckon. But I'm going to go to you for the next one, Janine.
Okay, I do like this one. Now, the next one is LOV, Lovisa Holdings. Now, everybody likes a little bit of bling. Even you secretly do, Dale. As a fashion jewellery retailer with a growing international presence, Lovisa may see enhanced profitability due to eased trade restrictions. Right, so what have we got? This one's actually probably hasn't got a huge amount of resistance there. Once it gets through this level here at about $34, then we could see it shoot up. But I'd actually really, the more conservative part of me would like to see a bit of a pullback first, even down to some of these levels here, closer to $28 before we then measure how far it could go back up. But of course, once you've got the understanding of technical analysis and you know how to apply it, which is what we teach our students, then you know how far a stock's going to run for in most of the time. So that's probably one of the biggest...
gentle pause before it just shoots off like a rocket.
Look, some students will be looking at this and thinking, okay, Janine, this thing could go through its all-time high, like Dale just mentioned. A bit of a consolidation. We need to see that first, a test of the low, a proper test, and then a move back up. The only thing here is that there's a bit of short-term, there's about 15% to the high, which is nice. You can still make a decent amount of return for the short term with a 15% profit. Just depends on what your stop loss is and where you're willing to set it. If you took it here, once it goes through, your risk is around 11%. Is that enough for you? Sometimes people say, well, how do I know how far this stock's going to go? And that's the thing that I guess that I'm so passionate about. When you do Module 4, price analysis in our diploma, you will know how to turn blue sky into a map that tells you where those next turning points are. And to me, that's really critical in being able to get some really good returns and know whether or not you can take it. And maybe this thing's going to go to $44 as part of the next run, and there's actually really a 30% upside, which would more than justify the risk.
But that's the thing, isn't it? Knowing how stock is going to unfold in price, pattern and time before it actually does it into that white space on the right. That's the key between a really great trader and most people who trade the market who are guessing and just looking at today, not necessarily looking at the risk-reward ratio, which you just talked about, but also how they're going to manage it moving forward. And that's a real critical thing that you mentioned that we teach in our courses. Last stock, Phil?
All right, well, this is the one I think you were referring to earlier. Yes, James Hardie.
Don't let me down.
No, and I mean, look, this stock is in an interesting spot right now. Obviously, building materials company with substantial operations in the US. So any good news is going to bode well for this one, especially with what we've been seeing with the share price. And I want to start things off on the monthly chart here because, when you look at the history of James Hardie, it's been able to produce I mean, until recently it came of a all-time high in March 2024, and we've got to factor in a lot of scenarios. We've had COVID, we've had, a GFC, and it's still managed to provide, higher highs all throughout history. And right now, what's quite interesting to me, if we measure the most important pullbacks on this one, and let's just go from COVID, we've got about a 59-60% pullback through there. We measure a pullback down through here, and that's gone about 55%. Let's go out throughout history and measure a few more major pullbacks. That's about 50. Now this one's going to be a bit further, but what's about 70% there, 67, 70. So we're basically looking at around that 50% plus pullback generally signifies the end of these down moves all throughout history. And if we measure what we're seeing today, well, guess what? We're almost at 50%. So the reason I bring this up is because we're almost at that extremity in terms of when buyers do get involved with this stock, and that's important on a big picture basis. And if we go back to that chart right now.
That's the reason why I liked it in the pullback, because as our students know, these levels are so important.
Yeah.
And it shows you how far, because the number one things we need to understand is strength and direction. You get those two right, you're going to make money more often than not.
Yeah.
And that's what most people don't get right.
Yeah.
As our students, we teach them how to get those two right.
Well, you make the money when you sell.
You do.
That's the only time you lock the money in. So, knowing that, having that map to say, okay, it's likely to get here with a high degree of probability. I should be thinking about my exit. And as you guys rightfully say, most people are very quick to buy, but then there's that question, all right, what now?
Yeah, but they're buying because they're buying on hope most of the time. And we teach our students not to do that. You're not buying on hope. You're buying on potential and understanding direction and strength. If you understand the direction that's going to go with high probability, and then you look at the strength and the risk that Janine talked about earlier, what's my risk and then what's the potential strength? If you line those up, you're going to get it right most of the time.
Yeah. And, just to even add what's quite interesting with James Hardie, if we go to that weekly chart, because we are walking into, we're almost a month out from annual earnings. And, looking at what stocks are doing just before earnings can give little clues in terms of what kind of, report we're looking to get, because, there is a thing called smart
trading.
No, I'm not saying it, but generally, if the market does give clues prior to these announcements coming through, and off this real significant low, we're seeing James Hardie start to pick up some really big volume coming in on the last week. So keep a close eye on this one. There is this big gap around $45, so I don't think it's out of the woods in terms of will this run extend beyond $50 and provide that real bullish confirmation. Given the nature of the fall, I want to see the confirmation on the monthly, not the weekly.
Cool. Well, if you do want to understand the market and also really how to construct a portfolio better to get better returns, more consistent at lower risk, then how about get a copy of my first book, How to Beat the Managed Funds by 20%. Best yet, it's free. All you got to do is pay the shipping. I've paid to print it. Now I'm going to give it to you. All you got to do is pay the shipping. Head off to our website into the shop and you'll be able to get your copy and send it to you. And you never know, I might actually give you a call. Anyway, let's move on. Now, later on in the show, we're going to dive into some more stocks likely to win on the tariff pause, so stay tuned for those. But now, let's move on to our trending topic for the week. Now, I'm going to handball this one to you, Janine.
Fantastic.
You're the what do you call it? The conspiracy queen?
Just before, I didn't know what he was going to say
It's not a
then.
conspiracy?
Now, everyone's talking about the merger between listed investment companies, Platinum Asset Management and L1 Capital. Morningstar said the merger may deliver scale, but it won't resolve deeper issues dogging traditional active managers, including fee pressure and market share loss to passive investments like ETFs. We see the opportunity to scale up as positive for shareholders, and we'll take a look at what the share prices of PTM and L1C reveal. Also, the big question, have ETFs really won?
That's a really good question because, most people know my thoughts on ETFs, and if I had a better acronym for them, I would. But, to me, are you better off in a listed investment company or an ETF?
People are always looking for what's next, right? And right now, ETFs are not what's next. What's next is constructing a really smart portfolio. ETFs will send people over the cliff because the herd will continue to run into ETFs. ETFs will get bigger and bigger. Everybody will be sold on the idea and it will be the thing, as you've said, for years. the reason why people lose their money, it'll be the same thing that happens every cycle. People get complacent. They're happy while they're making money. They're not thinking about the risk and how to manage it. And right now is when you should be learning how to do that.
Well, look, I mean, you just quoted what I was talking about or have been, because people do not read and understand what an ETF they're invested in. They just go, oh, everybody else is doing it. And as Buffett said, if you're following the herd, you're going the wrong way. Because Buffett's famous for not picking what the herd's actually doing and looking for the unloved or the great unwashed or something, if you want to talk about it that way. It's buy and doom, sell and boom. ETFs are the wrong way to be investing. And I don't know how many people I say that to, and they look at me shocked and going, but, and I went, no, understand them. So if you own index ETFs, go online and look at the ETF and look at all the fine print, download the document and use your highlighter and start highlighting things, because I tell you what, it'll scare the bejeebers out of you.
Well, Phil's already done that. He's done a lot of research, and he's actually going to open up his research and share it with you after the break. So you have to stick around. He's going to give away for free. He is.
Well, unfortunately not on the YouTube show. So, but you know.
Oh, for talking well, subscribe.
Yeah, but potentially on another week we can get into it. But for me, it's, you know, when you're talking ETFs, it's not so much, yes, all the risks that we have covered, especially, but one thing people blow by is the opportunity cost of your money, because, you know, they look at the ETF and they go, okay, it's a passive, safe investment.
It is.
And then you go and look at the return. The return is, you know, in a market, let's just say 10%. You marry that to getting the same stocks in that ETF, or for example, like a diversified global ETF.
Yep.
Let's just say all you bought were the 5 biggest companies in the world, globally.
It'd still do better.
The numbers are double just by owning 5 companies. So what are you really missing out on? And you're paying such a higher fee to run that ETF. So it's the fees and the opportunity cost for me that kind of get wish-washed by, as you said, it's a lazy approach, right? It's the lazy do nothing and it'll all be okay. And
people think it's too hard. Well, it's not. It's really easy. Just buy my book, you'll work out how easy it actually is. Let's go to the chart.
All right. Janine, this is your segment. I don't want to take over.
Yes, Janine.
There's 2 we can share.
All right.
One's the left hand, one's the right hand. Just do it.
Okay, Platinum Asset Management. So we've seen a merger going on between these 2 companies. The merged company is going to be called Merge Co. Now, looking at the share price, eventually in a boom, even these, these big funds eventually take off and have significant rises. So what we're looking at right now is a simple thing, one of Dale's trend lines on a chart, waiting for this thing to cross the line. Now, it hasn't actually bounced properly at the bottom yet, but there's a gap here, a bit of a telltale sign here, right near my dollar mark. And to me, that's looking pretty interesting. So all I need to see now is for this to bounce and to go up. Now, this is going to become irrelevant. Like once the merger goes ahead, if it's approved. But the way that these stocks are unfolding still affects the way that the chart, it still tells a story about how the chart's going to unfold of the merged entity. So do I think that the merged entity is going to go up? Well, as soon as we see, and we're going to see it on the merged entity, it's going to be trawling along a bottom. That's the way I picture it. And once that bottom gives us some sort of indication of a breakout, then we could see it go up. Will it go up to the same sort of degree that PTM would have if it was still trading? There's a 100% gain. I think that there could be some serious gains here. Now, what does that tell me? Well, the argument was that active management is not as good as passive management. These guys pick some of the big stocks around the globe to outperform the indexes. Now, in a bull market, which we're about to go into, even this traditional style of active management, but in a bull market, they are going to catch up, right? But eventually what's going to happen, if being selective about the stocks that you own in a bull market when it tips over is far more critical than just having a broad exposure, because we've seen a broad exposure just falls, doesn't it? 50% market falls each time.
Yeah, you take the roller coaster. So what's the other company?
So the other one,
L1C.
Now this one was actually trending up nicely. Now I know what you're going to say, Phil. You want this one rather than the other one?
Oh, look, I'm going to wait to see what happens of this merger.
It's a straight merger. I haven't read the document. It's a straight merger between the 2 companies, or one
takes shares in the other one. Yep. And I can't remember exactly there's some escrow that goes on as well with the shareholding, but It's quite interesting actually how that happens.
Okay,
so you
let's
can
get
read it
back
on
to
the
chart
ASX.
anyway.
So L1 Capital International is looking quite bullish. It's actually pulled back recently, consolidating into a nice pattern. A breakout above that high, if it kept trading, would have been an indication that this thing was going to continue to rise. And we just look at how far L1 was running. It made 16% on that last run. Could it make another 16% above that high? It definitely could. What did it make on the bottom off this low here? Now I just need to grab that. 18. So look how consistent that was. So could it have done it again? Yep. This stock could have gone up by another, dollar or $1.30 or thereabouts over and above that high. So could this merged entity go 100%? It's the question. If I look at where PTM could go just more recently, 50% would be the next level of resistance for it to rise to, around that 68 cents. So look, if you are holding PTM shares, I would say continue to hold them through the merger. That's my view. I think it would be better to be holding it than selling it at this point. Why would you sell it if you've been holding it all the way down? I mean, that would just be crazy. I wouldn't necessarily be trying to jump in today to the Platinum Asset Management. But if you were still holding it and you'd held it all through that decline, then I'd wait.
It's a watch this space.
It is a watch this space.
Very much watch this space. Well, anyway, time now to get back into our topic for the night and reveal whether now is the best time to get into some more stocks that stand to win on Trump's latest tariff decision.
Yes.
Now, I know the first lot were pretty awesome. So you're going to wow me for this next lot?
I hope so. Yeah. All right. Let's try. We'll start off with Brambles, and on the screen now is the monthly and weekly. Now, Brambles is in an interesting situation, and I mean, for me, the ample opportunity to get into Brambles was around that May 2023, October 2023. And if you're saying, yeah, Phil, it's all great in hindsight, well, there was a very clear pattern, and we've shown this time and time again on so many shows, that was a precursor to identifying what comes next. And we had this huge consolidation in price dating back from 2016. We saw a very similar pattern on the index. We saw it a almost exact pattern back in 2009 to 2012. This happens time and time again with stocks. There are phases they go through. Our students, we do teach this stuff, guys. So, it's quite uniform when you're looking at charts. And right now, what we're seeing with Brambles, the reason I say that is because we're in expansion. And the opportune time to get into Brambles has probably passed us by. Right now, if I'm looking at Brambles, I'm purely looking at this from a short-term trading perspective. That is it, given the nature of the rise. It's so vertical. If we go back throughout history, it's in fact the most vertical run we've seen yet. And to me, right now, it's about going to the shorter time frame and looking for trading opportunities. And, whilst we're having a little pullback here, I would like the stock to at least get back a little further to give me that really nice risk-reward setup, because that's what we're talking about here. Where's the risk-reward setup? From these levels to back to the all-time high, maybe, maybe not. If it gets down to around that $21, $22, maybe into this accumulation around here, then I would find it a bit more attractive. So, sorry, Dale, I've got to disappoint you on this one.
Well, you are, but maybe the next one, hey, I know lower interest rates and lower CPI makes the next one take off, I think.
All right, Janine.
And that is a pun for the next one.
Yes.
All right. And he's talking about Flight Centre, a travel agency group that has substantial exposure to the US market. The easing off of tariffs may boost consumer confidence and travel demand, but at the moment it's not being reflected because Flight Centre was making a truckload of money from cruises. Now, I don't know what the stats are, but I know that at one point it was down a lot because, older people, they were loving cruises. Are they still loving them at the same rate?
COVID happened.
COVID happened, and so a lot of more, because you're trapped in a floating petri dish.
Yeah.
If somebody's got colds. So therefore, more senior people that were the cruisers, stopped it basically. And obviously now that's all coming back. You're seeing cruises now fully booked and brand new big cruise liners being launched. There's a lot of positivity around that, so that augurs really well for Flight Centre. But obviously,
doesn't reflect in the share price at the moment.
Yeah, and especially, obviously the Aussie US dollar is another factor in it with us travelling to the US. But in terms of this company, I like it.
Look, at the moment, unfortunately, it hasn't stopped at a level of support that I thought it might. It's actually gone under that level. Now, sometimes stocks can break below these levels and then that sort of signifies the end of the decline. So you could be right.
But that's pretty normal. When you see a big fall, quite often you'll see this first move out is moves up and then comes right back really bearish before you get the biggest move out of it.
Yeah.
It's just a typical pattern of what, as I say, it's darkest before the dawn.
And it speaks to the dynamics. If you're, a big player and you're looking for that deep value, looking in the future, 6, 12 months, 2 years, saying, okay, things could turn around. You're not going to want to get in and for the share price to fly through the roof because you've got to push volume in there. So that typical pattern that you say often unfolds, the first spike, and then we get that calmness before the real move happens,
All right.
Okay.
Now, we're going to move on to the next stock?
Yep. But look, I think you've just hit the nail on the head. You're waiting for that bounce out, which could be there, it might be there now, but it's got to get back through that trend line or that momentum line.
This should be on everybody's watch list, I really do.
Okay.
Next one?
All right, Fisher and Paykel. I seem to be getting all the ones running at all-time highs, but that's okay. Again, this is a healthcare company. Interesting, a lot of people with the name there think it's appliances, which it divested Fisher and Paykel Healthcare, and it derives 43% of its revenue from the US. So a big portion, manufactures a lot in Mexico, and while the company anticipates higher costs for FY26 due to the tariffs, the pause does provide some temporary relief, and so that might, work to the bottom line, especially when we're talking about earnings coming, in a couple of months. So, looking at the chart, I actually don't mind it, and the reason I say that, again, when I look at it, it's trading at all-time highs. It's a short-term proposition. It's a trading proposition right now. So it's all about identifying and being predominantly on that technical aspect rather than the fundamental side of things. Lining up the risk reward. Is there a good plane here to catch the momentum? Because clearly, there's real momentum going on. The leg that came out of 2023 was much stronger than the leg that came out in September 22. That's a good sign. And we've kind of held around that all-time high. We haven't really capitulated. And if we look at the most recent pullback in March 2025, I think we've got one last strong push, and that last push should take out the all-time high. Once we get this type of unfolding, and I won't go into it too much, we do also...
Healthcare is the biggest growth industry. I mean, everybody in the US is overweight, the vast majority of it, and healthcare, respiratory healthcare, heart health, those sorts of things, huge big areas in the US. For
big C-Day funding, and the AI advancements that are going into health, in the health space as well, is making it like a whole new wave of like health and tech in combination. But look, still to that point, I think it's more of a trading stock right now. It gapped down, popped up. Take the opportunities when they come, but also be mindful that a healthier pullback, 20 or 30% plus, is probably where the real value is going to come in for the more medium to long term.
All right, let's get in another stock that I actually love. It's come off recently a little bit, but it does have some great exposure in the US and I like it. So let's go to you, Janine.
Computershare, me too. Computershare provides a share registry and financial administration service. With significant operations in the US, the tariff pause may improve market stability and support business activities. So looking at the way that Computershare has unfolded, it's quite odd. It's like a brambles scenario that Phil was showing earlier. There was a bit of a consolidation here, it's taken off, bit of a pause. But if we're looking at what's happening more recently, we're seeing the share price consolidate below the all-time high. Look, ideally, I would have liked to have seen it come back and spend a little bit more time around $35, $36.
Why?
Just because it's so close to the all-time high, right, that the theory says that not to take it until it gets through the all-time high. That's what the theory...
That's your theory, that's not mine.
Well, that's what you teach in the courses, right?
But I also
that's
teach
what's
other
in the
stuff.
course, right? So, and there's not a lot of difference here in terms of that breakout there of the pattern. There's probably about 3.7% to the all-time high.
I'm loving this at the moment. I'm excited.
Well, that's great. So look, if we put a trend line underneath it, we can run it up here. I'm excited too about it, but I'm just saying...
You sound excited though.
Oh no, I am. It's on the hot stock list for the direct equity. So I've got it up there on the top of our list. But it's just in terms of this run here, I'd really like to see it get through that all-time high to make sure that we've started that next run, because it could just as easily come back to the angle of that trend.
It doesn't want to. It's just been showing you for the last year or more that it's not going to wanting to do that.
At the moment.
That's what I'm saying. To me, this is ready. Just the spring's loaded, the jack in the box is
ready to pop.
It's ready to pop. Any comments from Phil?
Oh no, I mean, yeah, I see the same. It's consolidating right now, and anytime you do see these consolidations, I mean, all you need to do is just look through history. Big consolidations in May. We are, really getting that springboard right to pop up, and as long as it holds these lows around $39, $40, I think once it gets going, we're going to get a nice little run.
I'm with you, Phil. I'm with you. You're a bit too conservative for me, but anyway, it takes all to trade the market. But anyway, if you do want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. And we do, if you're looking at one of our courses, our diploma of share trading and investment course, we do have a very special offer on at the moment. Only open for another week or two. I think there's like a $9,000 worth of benefits for those people enrolling into the course or new into that course. Head over to the website, check it out, and give our team a call if you're interested in having a learn about how to trade the stock market. But anyway, moving on shortly, we have an amazing hot stock tip this week coming. And it's coming from Phil this week. And I know we've had a lot of emails telling us how much money people are making out of those hot stock tips, mate.
Yeah.
Tell you what, so stop giving them such good tips. But first, let's get into answering your questions. Now, Jay writes, could you please take a look at Vection Technologies? I purchased it on the 22nd of May at 1.9 cents. On a break of a trend and test of a bottom. I haven't found a good exit strategy yet, but I've now changed placing my stop loss at the bottom of the previous week's low and following a trend line on the daily as a guide. I'd probably use either as an exit. This reaffirms buying is easier than selling, especially at this price point. I know what you're going to say, guys. I really do. And I haven't even seen the chart. Who wants to take this one on?
Phil's looking at me, so I'll take it. First of all, I just want to check something about where his entry was. So it looks like...
It's 1.9.
So it's on the weekly.
Yeah, I know, but I just wanted to see where he was looking on the monthly. So is that the same level? The high, that's 23. So he actually got in before the bar started to turn back up again. So it was still technically, that decline was still down, even though that the low, the bar of the low of the month of May had turned back up to the top. It still hadn't confirmed
that's what I'm talking about is direction.
that it stopped falling.
Direction was wrong.
Yeah. And that's the thing that you talk about all the time, which, people don't look at the monthly chart when they're making their decisions.
No, he's making money.
He's just looking, he could say that, to you, that he is making money, so what does it matter? That's what the comment would be.
If you make money and you don't have it, it sounds like he had a strategy, so that's great. But if you don't have a solid strategy and you make money, that's not good trading. That's bad trading. Because anybody can flip a coin and get one right and make money. It doesn't mean you know how to trade.
Well, he must have done his research to look at this stock to know, because there is a strong level.
That's what I'm saying. He's got some strategy there, so that's great. But anybody can just guess one, But as he said, selling at this level is harder. Do you want to make a comment, Phil?
Yeah, look, I can understand why he's saying it's harder, because the nature of the price action has switched to it's gone very volatile. And even though this stock is very volatile, it's even more compared to what we've seen in history. But hey, this is the price you pay when you want to trade stocks at these levels at 2 cents.
Can I ask either of you, would you have bought at the same point?
No.
Not as it was falling, mate. I can see something if you're truly risky a little later on, not too far away from that, but not at that point. And the point is, when you are going to be trading stocks like this, you got to expect this crazy price action. And not just on the way up. Don't be surprised if it comes back just as quick on the way down, because a lot of these stocks, when they are coming out of these lows, they're often driven by hype and speculation. And that speculation comes up just as down once reality sets in that, hey...
Well, especially on the way into reporting season as well.
100%, and that's the point, because a lot of times news will come out in forums or what...
Maybe this is a precursor to something that, before.
Well, you never know.
But let's just have a look. In terms of the profit at the moment, the high was 120.
He's having trouble selling. We don't need to...
Yeah, that's what I'm talking about.
What should he do?
Well,
10 seconds.
I would say just set a line in the sand, because, if it comes down and fills this gap, that's 31% fall.
Huge.
I think you have to treat this stock differently in my book.
given the nature where you are in the market, I've got no issue with, like you said, go on the shorter time frame and lock in some profits. I've got no issue with that.
Anyway, next is an email from Jimbo who writes, I was hoping you could take a look at ABB. From a medium to longer term perspective, I'm bullish on the stock. However, as it is relatively new, I'm only trading it short term with smaller position sizes. The stock has had 3 attempts to break through $4.30 in the past 5 months, suggesting it could be in an accumulation phase. Despite the fall over the last 4 weeks, there were some big spikes in volume, and I think this is evidence of a big player who has swooped in with a big purchase. So, do you think we're about to break out, continue the accumulation, or do you think the stock may be about to fall? Go for it, Phil.
All right, quite simple this one. Let's go to the chart for you, and I'll raise it
from Jimbo.
Yeah, I mean Jimbo's is good. He always emails in, but I would say rather than the last 3 times, Jimbo, there is an additional point back in 2023 where this found resistance at 430. So good that you've identified there is clearly a ceiling here, but the stock is trending up. Now, what's interesting to me is as it's trending up, it's getting slower and slower on those up moves. You can clearly see from the first run up, the second one's been less and the third one's been even smaller. So whilst, yes, there could be a period of accumulation going on here, it can be as simple as this. Monitor the move up with this momentum line. The second it breaks through here, you can confirm that, hey, it's not running with this trend and something looks wrong, especially as it's found 430 as a ceiling. Now, the other point I want to raise is the volume. To initially assume that there's somebody buying this, that can be dangerous too, because this is just volume. Whether it's buying or selling volume, it doesn't tell you that just by looking at the volume itself. So be careful making those assumptions. It could very easily be a big player with the way it's tracked sideways, dumping a position. And so I think that's an important point to keep in mind, that we can lock ourselves in these views when we're trading stocks just because we think, okay, it's the lens that we're looking through. We're looking to buy, so it must be someone important buying. But there's been bigger volume on this stock well before in 2024, and coming at off levels where you would see institutional involvement. So right now, within trend up 30%, whatever the stock is, yeah, I'm not so quick to call that a big buyer.
Oh, good answer. There you go, Jimbo. That's Phil's answer for that. But keep emailing in and we love them. Now, Nick's email is next and he says, can you look at WA1? I'm looking at a short-term trade to the all-time high. Can I go to you, Janine? Short-term trade to the all-time high.
I opened the chart and almost fell in love. Looking at this one, 1 million. Yep, 1 million. We just dragged this across here. We're just looking at the volume first. That's one of the most important things, just understanding the stock. And if I see that, it says, about 1 million, 1.4 million a week, so it's still okay. And look, the price has had a nice run. It's actually looks really strong. There's some really good resistance levels, nice clear levels marked, where it stopped recently. So people think, oh, it's pulling back, and they get concerned about it. But we actually don't. We think that when you see a stock pull back from a line like that, it's just going to give you more confidence in knowing that it could just break through and it could be the start of a new run for this stock. So looking at that, a little bit more of a consolidation potentially would be nice before a breakout, but it just looks clean, doesn't it? I mean, you've got 30% to the all-time high.
So he's saying short-term trade to the all-time high. Is that a good strategy, or what would you do?
When you say, is that a good strategy? Well,
he's saying short-term trade to an all-time high. Is that something that you would go into a trade with?
Look, if a stock's looking that strong, I would say that if you start off as a short-term trader, could end up being in a more a medium-term trade. So I wouldn't be looking at trying to just take a profit at a level, if that's what he means.
So you're saying you wouldn't set the target at the all-time high?
No.
Okay, what would you do, Phil?
Yeah, I think with the nature of volatility, if you are going to trade this short term, you have to really focus in on what that weekly volatility is, because you could very easily get caught and get stopped out before the stock eventually does end up going to the all-time high, just because you've kept things tight. Your time frame's longer relative to the weekly movements on this stock, if that makes sense.
Yeah, well, my thinking is if you set that type of thing, what if it gets 3/4 of the way to the all-time high, and you're waiting for it to get to the all-time high to sell, but then it turns down from there. And so that's what I see a lot of traders do. It's like you stay with the stock while it goes up and you get out when it goes down. regardless of what level it is above it.
Yeah.
So, and to me, setting that to my mind is saying, well, that's where I'm going to get out, but it could get you into that false sense of, I won't say reality, but you know what I mean? It's like, oh, it's getting there, so I'm going to hang on until it gets there, but if it goes away, then what are you going to do?
The thing that I like about what Nick's chosen here is when you look at the chart, you'll see on that rise, it's very different personality to what it's been in the past. You know, here it's very choppy, huge volatile swings.
It looks great.
Same as here. This is just like a beautiful, you've got all these higher steps. It's moved up, pulled back, moved up, pulled back, like moved up again, it's pulling back again. I think it's changed.
Janine's in love, as she said anyway. But now, let's move on to the next email. Now, Sean writes, I am a long-term holder of CBA. It's had a stellar run and is close to my stop loss. So my question is whether CBA's current pullback is healthy and it is about to resume its upward trend, or is it about to head down to 160? I'm going to you, Phil.
Yeah, all right. I mean, this is... what do you do with CBA?
Every time you think CBA is going to calm down, it just goes stuff. It gives us the middle finger and turns around and goes up again.
Yeah, and I mean, you know, it's had all the press to say most expensive bank in the world, and you know, to get. But look, let's go look at the chart. I think that's the most important thing. I think a pullback will be healthy. That's for sure, because we've had, you know, since March 2025, we've had almost 3 months of direct upward movement on CBA. Now, you look back throughout the history on the weekly chart, you don't really see that too often. You do see pullbacks in between. Now we're getting that first pullback. So, yes, that is healthy for the longevity of this stock, but I just keep looking at the nature or the gradient of this rise coming out from May 2024. What this has done
vertical
in 2024 and 25, and I'll show it visually. I mean, we zoom that out. You look out through that whole history. This is
it's like a tech stock.
Yeah, it's dating back to 92. We have not seen CBA run like this ever. And to me, when I see stocks like this, whether it's a specky, whether it's a tech stock, whether it's a drone shield, at some point they experience a decent pullback.
Yeah.
And often that pullback comes back to the sustainable rate of rise, which would be, you know, somewhere along these levels or potentially even deeper if we're talking CBA, somewhere like that. So, you know, if you're holding it, great, but...
He says it's near his stop loss. So do you want to actually cover that? I'm wondering where his stop loss is.
How?
Yeah, I mean, unless he's got a trailing stop up under it, you know, and he's probably looking... Yeah.
It's a pretty tight stop.
I mean, it's quite a...
I mean, he could have set it underneath that outside bar.
Yeah, that low through there, and... Or maybe he's just seen this big downswing that he hasn't seen in 3 months, thinking, what's wrong with the stock now? It's probably time to get out, you know?
I've got this stock in my super fund and my stop loss is nowhere near that.
To me, it comes down to what the strategy was initially for this. Is it a long-term play? As you said, is it something you're holding long-term in super? Because a lot of people do hold CBA for the long term. They get the nice yield, they get the growth over time. If you've picked this up around that 160 level and taken it as a speculative trade, if you will, or more a trading stock, well, then, yeah, you know, you've got to make your decision on getting out and locking in some of that because of how hard it's run. But, yeah, technically on the chart right now, nor on the weekly or on the monthly am I seeing any real confirmation of it rolling over heavily, because this pullback might just come back to 170 and then start running again.
Yep.
So, you know, he's got to make that decision.
Well, anyway, now it's time for our hot stock tip for the week, and the pressure's on Phil.
All right.
To deliver the goods, because as I said, we've had so many people that say they've made a lot of money out of hot stock tips. So,
yeah.
And they all came from Pedro. No.
Well, a lot have come from Pedro, but hey, look, imagine what you could do if you actually go and get educated and do the course. So,
well, that's true too.
Yeah.
You could be another Pedro.
You could be another Pedro. He'd love that. But look, today we're talking about BHP, one of the biggest stocks on our market. And, you know, there was some big news that came out on BHP today, actually, and it ordered to pay workers an average $30,000 more after a landmark labour hire ruling. Wow. So, look, that's obviously going to be detrimental to the bottom line. The BHP share price hasn't been loved. You know, this is news that is great, and I want to go start there on the chart, but I have given something special. I'm not going to make BHP the hot stock tip. I have actually picked a stock in the same industry, in the material space, that does look very attractive, and I wanted to measure it versus BHP, because if we look at what we're seeing, really lower highs, lower lows. This is typical price action of a stock in a downtrend.
Yep.
Unfortunately, it has to be said, right, for BHP. There was hope back in March 2025 that things were going to turn the corner. We found that support at that important level if I draw it. And I'm not ruling out that BHP might not turn the corner around here because it still is holding this $35. I think it's very important. We have seen the start in terms of a higher base through here, but it's got to get through this momentum line around $40. Then I'd start getting more concerned. Now, conversely, I've picked Alkane Resources, and these two rectangle boxes, if you have a look, it's a stark difference in terms of what's happened during the same time frame. They're both on the monthly chart. This one's going up while this one's going down. And that's quite important for me. And if I open it up on the monthly chart here, you don't have to be a rocket scientist to work out how important 40 cents is on this.
Looking spectacular.
Right, it's holding above 40 cents, failed to hold it throughout history, had a nice period where it held in 2020 and then shot off. This time it's pulled back again exactly to that level, broken through serious momentum, in an uptrend, touching the upward momentum line. If this starts rising again and gets through 82, 83 cents, I think it's poised for a nice run to 125.
Reg might be polishing the trophy to give it back to you.
Well, you know, he's been working with
He's been working with a good mentor.
Yeah, I didn't want to say it. Yeah, but
He's been working, but no, that is a really good look.
Interesting.
I do like that, and I think it's a nice poise. The pattern's perfect. It's nice and orderly, and I think it'd be a nice, easy trade for somebody.
Yeah, because we can always get caught into that, hey, BHP, look, it's at an attractive price, it's cheap, but that confirmation's not there yet.
No.
So go and look at stocks in this industry because at some point they will turn. And if you're waiting for the big player to turn first, you might be late to the good opportunities now.
Well done there, Phil, for that good pick. But anyway, if you do want more from us, check out our video, ASX top stocks to double in the H2 25.